Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. Paris milling wheat. It has been a few weeks since my last commentary. This has been due to my participating in a number of conferences on technical analysis in the UK and abroad. It has given me the opportunity to take a fresh look at the market here. So, after the market created a cusp back in late May, we had a resultant break higher, something I had cautioned about back then. We had prices rise up and fall down through stratified layers of support and resistance. Some of them seemed and still seem quite dense, such as the congestion area we sit in right now between 238 to 242, containing a March 2013 high at 240. The short medium moving average currently 242, the February 2013 high at 247, and the now flatlining medium moving average currently 243. Above this sits another congestion band between 250 and 255, this time with the 2013 high at 253 within it, as well as the declining long moving average currently 253. After that, another small congestion area between 258 to 260 with the 2011 high within it at 258, followed by a bit of a deserted area up to some of the most heavy looking congestion available above, between 267 and 270. All those numbers are enough to be going with for now. The question I posed many weeks ago was whether the moves lower had managed, by their nature, to trigger the beginnings of a new bullish movement. The answer has been the equivalent of a shoulder shrug and the word no. I had previously spoken here for many weeks about the formation of a possible descending scallop pattern. I said back then that this daily chart had the makings of a better example of a descending scallop pattern than in any other grain market. However, the hesitation to form the lip, whilst fairly minimal, has killed off this idea and this pattern. The final things I have to say are big picture items. Firstly, this market is still well within the big bear channel, currently 192 to 268, highlighted in dark blue on my daily chart, and originating from October 2022. Secondly, and more immediately, is the opportunity for this week to become a weekly key reversal, something I've not really seen on the other grain markets at the same time. Thus, if we close tonight either over 242 or under 240, then we'd be on. Anything in between, we have the lesser outside week, and at this moment we are barely looking at an outside week here. London UK feed wheat. The move higher from the May to July double bottom pattern reached its climax in mid to late July with a combination of an island top that was also part of a small double top, an Adam and Eve type. Since then, prices have moved lower, reaching both primary and secondary targets below for the double top. The moving averages have tried to corral the market with the short medium moving average currently at 189.5 acting as a sort of cap on any rises, and the medium moving average, really, that's currently at 187.80, acting more as an attractor compared to anything else to the market, rather than as a support or a resistance. Interestingly, the key recent feature here, and it is a surprising feature, has been the neckline, highlighted in dark blue on my daily chart, currently at 182.85, of the May to June reverse head and shoulders bottom, acting as a pretty reasonable support. Though I suspect in the background, the September 2021 low at 181.70, and perhaps more importantly the 50% absolute Fibonacci line at 180.5 have helped prop up prices. This situation, I suspect, is not designed to last, as coming in from above we have the declining long moving average, currently 198.65, dropping down to pressure prices lower at some point. You can see the effect it had back in late July, capping the market for small double top. It is some time yet until the long moving average drops into the frame, but I would keep a close eye on it, as I suspect the room for maneuver of this market may be becoming quite restricted. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.